All right, let's dive into a trading strategy that's all about precision. It's called the narrative sniper, and it's designed to help you find those absolutely legendary wins, the kind that can make your entire trading year. Let's get right into the blueprint.
1 to 10. Yeah, that's the one. That's the risk-to-reward ratio every single trader dreams about. You're risking just $1 for the shot at making 10. Seriously, one good trade like this can define your month, maybe even your whole year.
So, if it's so great, why doesn't everyone hit these all the time? Well, you know the catch. It's that gut-wrenching feeling of setting up a perfect trade, getting stopped out by a single tick, and then watching the market absolutely rocket in the exact direction you predicted. It is maddening, and frankly, it's what kills most retail accounts.
And that brings us right to the heart of what this strategy is all about. How do we hunt for those incredible sniper entries without constantly falling for the same old traps that wipe everybody else out?
The goal here is simple. Stop giving money back to the market for no reason. The key to doing this is what we're going to call the narrative entry. It's all about learning to read the story the market is telling you, so you can find setups that aren't just high reward, but actually high probability too.
So how does this actually work? Well, the entire system is built on one single foundational concept. I want you to forget your indicators, forget all the hype you see online. This is about one thing and one thing only: pure, clean market structure.
Think of it this way. Trading with the trend is like swimming with a strong current at your back. It's almost effortless to make progress. But trying to trade against it, you're just fighting a massive force that's going to tire you out and, eventually overwhelm you.
The market really only does three things. It trends up, it trends down, or it gets stuck in a messy, choppy, sideways consolidation. For this strategy, we want to stay far away from that sideways chop and focus on catching a major, powerful shift in direction.
And this right here, this is the very first signal we're looking for. We're on a high time frame, let's say the 4-hour chart, and we see the classic pattern of a downtrend. Lower lows, lower highs, and then suddenly it breaks. The market prints a new higher high. This is our first real clue that the buyers are starting to wake up and take control.
But hold on. Just seeing that break is not enough to enter a trade. In fact, if you jump in right away, you're making the single biggest mistake that almost every retail trader makes. You first have to understand the trap.
And this brings us to a really critical concept called inducement. Think of it as bait, plain and simple. The big institutions, the market makers, they create this really obvious, really tempting place to buy right after that trend shift. They do it to build up liquidity, basically to suck in all the early buyers, right before they push the price down one more time to the real institutional entry zone. So, let's break this down. The trap entry, that's the first, most obvious demand zone you see. Everyone sees it, and everyone wants to buy there. But the real entry, the one we are patiently waiting for, is what's called the extreme zone. This is the origin, the very beginning of that entire upward move. It's where the big institutional buying really kicked off. And you better believe that's the level they are most likely to come back and defend. So the most important takeaway here is this. We have to learn to ignore the obvious bait. We're not interested in the first entry. We are patiently waiting for the price to come all the way back down to this extreme discount zone, because that, my friends, is our highest probability entry point. Okay, so we've got the theory down, right? Spot the big trend shift, avoid the inducement trap, and identify that true institutional zone. Now, let's get into the practical, step-by-step process for how you actually execute this trade.
It really just boils down to these 3 simple steps. First, we find that high probability extreme zone. Second, and this is crucial, we refine our entry to tighten our risk. And third, we wait. We wait for a very specific confirmation signal before we even think about pulling the trigger. So how in the world do we get from a pretty standard 1 to 2 reward trade to a monster 1 to 10? Well, this is the secret sauce, zone refinement. See, if we just enter on that big 4-hour zone, our stop loss has to be gigantic, and that absolutely crushes our reward potential. The trade is mediocre at best. So to fix this, we use what's called the 2 steps down rule. We find our zone on the 4-hour chart, but then we drop down 2 time frames to something like the 30-minute, and we look for a tiny, super precise area inside that much larger zone. As you can see, this just shrinks our stop loss down to almost nothing. And that is the key that unlocks that massive 1 to 10 reward. We're aiming for the exact same target, but with a fraction of the risk. But before we enter, we need the final piece of this puzzle,
And I mean it when I say this is the single most important rule for execution. You absolutely must wait for a confirmation candle close. This is completely non-negotiable.
Look, a long wick just touching your zone means nothing. A wick is just a rejection. It's often just a liquidity sweep, a quick stab down to trigger everyone's stop losses before the real move begins. But a full-bodied candle that closes above a key swing point on that lower time frame, now that's your confirmation. That is the market screaming at you that the buyers are in control and the shift is real.
So let's put this all together. It's like a perfect storm of confluence. First, you've got the high time frame trend finally shifting in your favor. Second, you've identified that extreme institutional zone and you've cleverly avoided the retail trap. And third, you've patiently waited for that crystal clear lower time frame confirmation signal. When all three of those things align, that's when you have a true high probability trade with absolutely massive reward potential.
So there you have it. That's the complete blueprint for the narrative sniper entry. The logic is clear, it's repeatable, and it's powerful. You've got high-level structure, a deep understanding of how liquidity really works, and finally, that last piece of precise confirmation. The only question left is, how are you going to take these concepts and start building them into your own trading story?